Most blockchains are marketing first, tech second. Algorand flipped that and paid the price for it. Built by one of the most respected cryptographers alive, it quietly solved problems others are still thinking about. So, why is the market treating it like it failed? Because it is 97% down from its all-time high and ranked outside of the top 60 by market cap, almost entirely invisible to the mainstream conversation. Well, stick with me as we cover what Algorand actually is, the tokenomics, the real adoption numbers most people are sleeping on, the risks you need to be wary of, and the exact millionaire math across 3 different scenarios. This is not a financial advice, always do your own research. It's 2017. A small group of cryptographers in Cambridge, Massachusetts are staring at the same problem every serious blockchain researcher had hit. You could build something fast, decentralized, or secure, but never all 3 at once. Silvio Micali was leading that meeting, and he had spent decades building the cryptographic primitives that modern blockchains run on, including verifiable random functions, which he co-invented. And his take was that nobody had actually solved the trilemma at the consensus layer. And with all that in mind, Algorand launched its mainnet in June 2019 with pure proof of stake. The network uses the mentioned verifiable random function to secretly select block proposers from all ALGO holders. Nobody knows who's selected until after the block is already proposed, which makes it nearly impossible for bribe or attacking validators in advance. Blocks finalize in about 4 seconds. It runs at thousands of transactions per second in practice, that is, and the network has never forked or gone down since launch. That is quite rare. And because there's no mining and no hardware competition, Algorand runs on a fraction of the energy other chains burn. 1 Bitcoin transaction consumes roughly 816 million times more power than one on Algorand. Let's now look at the tokenomics. Algorand has a fixed maximum supply of 10 billion ALGO, so there is no inflation beyond that cap. Out of that, roughly 8.89 billion ALGO are already circulating, meaning almost 89% of the total supply is in the market. What's interesting though is what happened to staking this past year. They had a real centralization problem, I'm not gonna hide it. Before a new staking program launched in early 2025, the Algorand Foundation itself controlled about 63% of all staked ALGO. After the program rolled out, that dropped to 21%, while total validator participation more than doubled. Not perfect, but a genuine structural improvement, I would say. There's one ongoing challenge though. Once all 10 billion tokens are distributed, staking rewards run dry. But don't worry, the foundation is working on this now through something called Project King Safety. It aims to redesign fees and incentives so that the protocol stays economically self-sustaining after the fixed supply is fully out. The sustainability paper outlining recommendations was expected in late 2025 or early 2026, but we still don't have it, so it is slated for release this year, with implementation targeted before 2027. In all fairness, solving this problem proactively is either a sign of responsible development or a sign that the tokenomics weren't fully thought through. It's probably a bit of both. Now, let's talk about what is actually happening on this chain today, because the price alone doesn't tell the full story. The infrastructure case is solid. 10,000 transactions per second, about 4-second block times, near zero fees, and 6 years with zero downtime. And the adoption case of last year is more interesting than almost everyone is talking about. HesabPay, the first interoperable digital payment platform in Afghanistan, runs on Algorand. In 2025, it delivered cash assistance to over 1 million people, and research found it was 96% faster and 60% cheaper than the alternatives it replaced. That's a working system touching real people's lives. On the institutional side, Algorand integrated with Google's Agent Payments Protocol and aligned with Swift ISO 20022 standards. ZBEC plugged ALGO into payroll infrastructure through MasterCard. A regulated German tokenization platform launched treasury bill tokens on ALGO too. An Italian water utility serving 2.5 million residents adopted on-chain infrastructure built again on our project today. And the list goes on and on and on. But the most important is this: decentralization and future-proofing. In November 2025, the project executed a post-quantum transaction on mainnet using NIST-selected Falcon signatures. And in December 2025, it launched opt-in P2P networking to make node connectivity more permissionless and resilient. They also made significant progress towards greater decentralization over the last year, increasing online stake dramatically from approximately 1 to 2 billion tokens in just over a year. The community now accounts for 80.6% of the stake, while the foundation's share declined further to 19.4%. Let's go through the main risks before we even touch the Millionaire math. The most honest risk lies with the price track record. ALGO is down 97% from an all-time high set right after launch in 2019, before the ecosystem had much of anything on it. The market priced in the promise and then spent 6 years waiting for the delivery. The 2021 bull run, the 2022 FIFA World Cup sponsorship, multiple hype cycles, none of them produced sustained price performance. In reality, a project can have real infrastructure, real adoption, and real talent and still underperform the market. Algorand is the case study for that. Another risk is that the niches Algorand is targeting, like payments, stablecoins, RWAs, CBDCs, are crowded. Ethereum and its layer 2s, Solana, and even permissioned DLTs used by banks are all pushing into the same territory, often with a much stronger narrative and liquidity. But when quantum computing matures into a real cryptographic thread, and most experts think it will eventually, Algorand is already years ahead of every other major chain on that problem. That advantage is easy to dismiss today, I admit, but very hard to dismiss later. Now, the part everyone actually clicks for. How many tokens would you need to hit the target of $1 million based on today's numbers? We'll take 8.5 cents as our reference price and a fixed max supply of 10 billion ALGO. Moreover, we'll go over 3 different scenarios, going from the least to most optimistic. Here's the first one, the bear case. Here, ALGO finds its way back to 50 cents per token. At that price, the fully diluted valuation would be about $5 billion, and that is roughly a 6x move. The math here is easy. To reach $1 million at 50 cents, you would need 2 million ALGO tokens. At today's price, that stack costs around $170,000 and some change. The second scenario is the base one, where ALGO gets a proper pullback and trades at around $1.50. That would imply a $15 billion fully diluted valuation, still far below its prior fully diluted peak reached at the $3.20 all-time high. Reaching $1.50 is about a 17.5x move. To hit the desired 1 million at 150, you would need the beastly 666,000 tokens, which would cost you a little under $57,000 today. And here comes the last, most optimistic bull case. Just imagine, quantum resistance becomes a real institutional differentiator. RWA tokenization goes mainstream, and Algorand's humanitarian infrastructure finally gets the global recognition the data says it deserves. And the market decides to push it to $5 per ALGO. That will be a $50 billion FDV. And this is about a 58.5x move. In this case, you would need 200,000 tokens to hit the $1 million mark, and it will come at the cost of some $17,000 at current prices. So what could push ALGO from where it is today toward any of those targets? On the tech and security side, Algorand's early move into post-quantum signatures and its roadmap for quantum-resistant cryptography give it a long-term narrative that most chains still have on their later list. If regulators and institutions start asking for quantum-secure rails, ALGO is one of the few that can raise its hand, like so, with a live demo. Another important thing is, if Bitcoin starts putting in clear higher highs again, or breaks into fresh all-time highs. Then liquidity usually spills over into the rest of the market. Once BTC and Ethereum feel expensive again, traders and funds start hunting for beaten down majors with real tech and low valuations. Algorand actually fits that profile quite well. So, is Algorand the most technically credible blockchain the market has completely overlooked? Or have 6 years of underperformance already answered that question? Let me know what you think in the comments below, and you may as well drop your price targets for this year and even further. If this breakdown was useful, guys, hit the like button, subscribe to the airdrops.com channel, and I'll see you in the next one. Ciao.